What an absolutely wild quarter this has been for the US economy. Forget the doom and gloom headlines you might have seen earlier this year, because the numbers just dropped, and they are setting the stage for a seriously strong end to 2025. We are talking about the fastest economic expansion we've seen into full years. Let's dive right into the headline figure. The Bureau of Economic Analysis just released the final revised numbers for Q3 2025, and real GDP, that's the true measure of economic output, increased at an annual rate of 4.4%. Now, if you've been following the updates, you know this is a slight upward revision from the initial 4.3% estimate, but more importantly, it absolutely crushes the 3.8% growth rate we saw back in Q2. Just think about that acceleration. We shifted gears and hit the gas. But perhaps the most stunning part of this 4.4% figure is how badly it outperformed Wall Street's expectations. Market consensus forecasts were predicting something closer to 3.3%. We didn't just meet expectations, we blew right past them by a full percentage point. This signals a level of underlying strength and momentum that many analysts simply failed to capture in their models. It suggests that the resilience of the American consumer and the adaptability of businesses are far greater than previously accounted for. So, how did we get here? What were the engine components driving this incredible surge? It wasn't one single factor. It was a potent combination of surprisingly durable consumer spending, a dramatic rebound in global trade, and strategic business investments focused squarely on the future. Let's start with the economic backbone, the consumer. Time and time again, when economic forecasts look shaky, the American consumer steps up, and Q3 2025 was no exception. Personal consumption expenditures (PCE) jumped by a robust 3.5%. This consumption alone contributed a massive 2.34 percentage points to the overall 4.4% growth rate. Nearly two-thirds of our entire growth came straight from people spending money, which tells you everything you need to know about current confidence levels. But what were people spending on? The spending patterns give us a fascinating look into the post-pandemic, late 2025 economy. Leading the charge was healthcare spending, which continues its steady expansion. But the real surges were seen into specific areas: international travel and recreational goods. After a few years of slightly restricted movement, Americans are clearly prioritizing experiences. They're booking those big trips abroad, driving significant demand for airlines, hotels, and related services. And they're also stocking up on high-end recreational gear, suggesting a sustained embrace of outdoor and leisure activities, moving beyond the consumer. Let's talk about something truly unexpected: the trade rebound. For a while there, trade was a major drag on GDP. Not in Q3. Exports surged by a staggering 9.6%. This is a massive reversal from the contraction we experienced in the previous quarter and showcases that global demand for U.S. products is back with a vengeance. This growth wasn't driven by oil or agricultural staples, but primarily by high-value capital goods and industrial materials, suggesting that international businesses are investing heavily, and they're sourcing those foundational items right here in the US now. Let us shift gears and look at the investments businesses are making, the money being spent, that will shape the economy 3, 5, and 10 years down the line. Non-residential fixed investment, which includes spending on equipment and structures, grew by 3.2%. And here is the technological heartbeat of this report. This growth was fueled almost entirely by the ongoing boom in artificial intelligence. Companies are rushing to acquire AI-related equipment, specialized servers, and intellectual property products. This isn't just a trend. It's a fundamental shift in capital expenditure, meaning businesses are doubling down on productivity enhancements through automation and data processing. It is a very strong signal that corporate America is positioning itself for a future where AI is central to operations. While consumer spending and AI investment grab the headlines, let's not forget the role of the public sector. The strength of this growth is also reflected directly in corporate balance sheets. Corporate profits from current productions saw a significant increase, rising by $175.6 billion. This means that despite ongoing inflationary pressures and the rising costs associated with the 2025 tariff updates, which were a big worry for many CEOs, earlier in the year companies were able to maintain and even improve their profit margins. This demonstrates strong pricing power and successful cost management strategies across many sectors. Finally, we need to look at the sectoral breakdown to understand where the value is truly being created. The US economy continues its structural shift towards services. The services producing industries led the way with a whopping 5.3% increase in value added. This includes everything from finance and education to IT services and entertainment. This is where the fastest job creation and highest growth rates are currently concentrated. However, it's not just a services story. The goods-producing industries, which include manufacturing and construction, also showed solid health, growing by 3.6%, while services are outpacing goods. The 3.6% growth in goods production shows that our industrial base is competitive, healthy, and expanding, especially in high-tech and material production driven by that export surge we talked about earlier. So, when you put all these pieces together, the resilient consumer, the AI investment boom, the trade rebound, and strong corporate profits, what you get is a 4.4% growth rate that feels sustainable and broad-based. It's a powerful argument that the US economy is navigating global challenges better than most expected, demonstrating exceptional adaptability. We've certainly moved past the anxieties of a potential near-term recession and are looking at a very bright picture heading into 2026. Now, if you want to understand the deeper implications of this AI investment spike and how it is changing the labor market, you need to check out my video from last week. I link that right here. Be sure to hit that like button and subscribe for more deep dives into the economic numbers that actually matter. Thanks for watching.